Welcome traders to this educational video of Nifty Analysis, episode number 18. Currently, we are looking at the weekly time frame of Nifty Spot, and what we can clearly see is that the price is above the 50-week simple moving average, which is a clear sign that we are still in an uptrend. And we can see that the RSI is slowly and steadily heading towards the 70 level, which is a sign of strength. Now, apart from that, one small reason to worry is that Nifty is still below this trend line, which is holding on since August 2018. That is a very old trend line, almost about 17 months. And as per technical analysis law, a trend line which is more older, all right, a trend line which is more older is supposed to pose even more stiffer resistance to the market. So this particular level right now is a very strong resistance for the market. Now let us head towards the smaller time frame, which is the end of day time frame. Now in this end of day time frame, what we can see is the price is still above the 50-day simple moving average, which is a sign that we are still in an uptrend, no doubt about that. But there is a slightly different story in comparison to the weekly chart. What we can see is that the price has made a new high. If we try to compare two different points, price has been able to make a new high, but I guess in RSI the momentum is not very strong. You can see this is a negative divergence sort of stuff coming up. All right, this is a small negative divergence, not a very major one, but yes, it is a negative divergence. Even in the awesome oscillator, we can see prices have steadily made a new high, but the lower high formation we can clearly see in the awesome oscillator. So basically this is a negative divergence, and the negative divergence has come up at a level which is a very strong resistance. Now there are two different reasons for that. First of all, we need to understand that. The first thing is that we are at a Fibonacci extension. All right, now this extension is providing a small resistance to Nifty Spot in the daily chart. And this resistance, the Fibonacci extension, becomes even more important because it is accompanied along with this trend line which is holding on since August 2018. So as a trader, I would say that as a short-term trader especially, I would say the risk-reward ratio for a long trade as of now is not favorable. That is what I can see clearly. The trend still remains on the upside if there is some major dip in the market on the downside, and after that dip, if the upside momentum starts to be seen again, then yes, I would be interested in going long. But as of now, at this juncture, the risk reward ratio is not extremely good for a long trade. If we close above this trend line, at least 100 points above this trend line, then we'll face another resistance somewhere around 12,514. So person who's supposed to be going long at this juncture needs to be very, very careful. And I would advise that this is not a very good point in the market as of now to go long. If the market dips, as I said, if the market dips and once again, if we see some sort of upside momentum coming up after the dip, then yeah, probably it would be a good idea to go long at that point of time. So that's all from my side today. In my next video, I'll try to share something even more interesting. Till then, trade wisely.